One item, one chart, one analysis to tell us what's going on in the market. Let's break it on down. What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And I am doing a very late night video because I've been all over the place looking at the crypto charts and just now jumping back into the VeVe action to tell you what's happening in the market. Now, of course, this is not financial advice. However, we are going to do a very simple analysis where I have picked one item to look at one chart. Yes, one chart. I don't know where this accent is coming from, but it just went to Nigeria. One chart, one analysis to give us a good picture of what's happening in the current phase of the market. And I picked this one item right there because it is quite possibly one of our oldest grails. Yes, it's the Todd McFarlane. And I've got one, of course. I had two. Sold one for $1,000 about a year and a half ago. I regret that. Yes, I do regret it. However, I will be holding on to this one for quite some time. Let's pull up the chart for the Todd. And we are going to start with the shortest chart and work our way out. Now, this is, of course, the 3-day chart. And this highlights this event that we just had, which was the delisting of the non-KYC account holders market items. Did that make sense? Market items? So here it is right here. This is where the delisting occurred, right? Rolling up until August 1st. So we saw between the 31st and the 1st was the time that the items were taken off of the market, which left the higher priced items holding down the floor. And as we suspected, and as I mentioned in the last VeVe video, once you get over an artificial interruption of the normal market, and I don't mean scam or something illegal, an artificial interruption would refer to something of what we just saw, where items were removed because of the rules. But once that event is over, the market levels out, and it's the natural buying and selling pressure that takes over at that point. That is why we saw a movement from $2,200 down to where we are right now, sitting at $1,750. In fact, it's less than $1,700 right now. I think this price, let's look and see how old this price is. I can't remember within the last 4 hours. So now we're sitting at a price of $1,690 something and change. So that's our 3-day chart, which shows the return to not just the previous price, but a lower price. Let's move it on out. Check out the 7-day. There's our bump headed to the end of July. Wow, what a bump. So it looks like we had somewhat of an uptrend here, and then you got the spike, and now you have a return to $1,750, really less than that. And that would be less than the lowest previous price of $1,799. So the overall movement on this chart is moving down. It's a little harder to see, but facts is facts. That's what we got. Moving on to the 30-day chart, and it is absolutely clear that we are still in the distribution phase of the 4 cycle components, the 4 stages of the overall cycle, which is accumulation, distribution, markup, I'm losing my mind. It's late tonight. Accumulation, consolidation, where prices bump up, markup when we go parabolic, and distribution, where we have a decline in price until the next cycle starts. All right, so for this 30-day, we were way up here at what, 2,800 something, and now we're sailing right on back down. We've been crawling down since the beginning of July, but let's kind of see what we look like when we run out here to the 90-day. It's a little bit more clear here, and makes you a little bit more sad when you're seeing that high price there of around $4,000. So coming up from this, oops, I don't want to move me. Coming up from this peak right here, and you had this bump that happened at the end of June, which really makes the end of July bump look like nothing. I don't even remember what this one was caused by, but we thought this was the end of the distribution period, and it wasn't. It was just a bump along the way, and you'll see that more clearly when I jump out to the 180. All right, so the overall trend there is down, and it is clear that we are in the distribution phase of the market. Let's run out to the 180-day chart. Oh, man. Look at this. We're nearly at $12,000 as we roll back all the way to February of this year. Holy smokes. And so this was a part of the steep decline here. And then we level off. And now look at that bump at the end of June. It doesn't look so big now, does it? Nice little bump. And then we continue on down to the current price. All right. So we are obviously still within that same overall direction. Although now you can see here that there is a little bit of a flattening effect, which tells me we're getting closer to the end of the distribution phase. Yeah, that's what you probably want to hear, right? That's what I want to know. Let's hit the all. Now, keep in mind, this does not include data from the jump, from conception. This is only the data that mynfttracker.com takes us to October of 2021. Okay. And that was where we were somewhere around a price of $15.20. I remember back when I bought my Todd for, it was like $300. The first one I traded for because I waited until after it sold out on the app, and I got really upset with myself for waiting because I thought it was the coolest NFT on the app, but it was too high of a price. Yeah, right. And I traded a few items and basically traded 3 things worth 131 gems to get the first one, and then I bought the second one for 300 gems. Okay, now this is just amazing. So taking it all the way back to October, and we see the big old pump that happened. I guess, wow, it was, now that I'm remembering right, I was thinking that market cycle peak. I've been saying November, but I was wrong about that. That's when we hit the consolidation. See, here it is right here. You can see these very clearly. This is the end of distribution before we jumped into this. This is accumulation. Notice how price is flat. And then what happens? Slight dip, bump. That's consolidation. And then a couple more bumps, and then there's our parabolic run up. That's the markup phase, all right? And then we've had the whipsaw effect up and down, and then we have these stages of flattening, and notice how they're getting flatter each time. So there are your 4 phases of the market. In fact, let's just stick the numbers up here. Accumulation, it's the first step. Consolidation, there's the bump. Markup phase right there, and distribution is what we are in right now. But are we in the new accumulation phase? Are we close to it? Well, it could be, because if we just draw a line from this previous level, it was around 1,500. We're just above that by a couple $100. So could this be the new level that we start anew? Is that the new floor? Time will only tell. We could go back down to that previous accumulation level of 1,500. We could even go lower than that to the previous accumulation level, which was 300 gems. Time will tell. We'll hang in there and see what happens. What I'm thinking is that the current bearish phase, this distribution phase, could last longer than the last one because of world economic conditions. All right. There's a lot of blood in the streets. The stock market is about to get whacked again. And of course, we are in somewhat of a recession, depending on whose definition that you're going by. According to the current administration who changed the definition, we're not in a recession. However, prices make it seem that we are. So there you have it. That is my analysis. This chart, I think, is a good enough representation for a short video to tell us exactly where we are right now. It's hard to stay excited during this time, but keep in mind, for the contrarians like myself, smart people buy when the market is down, okay? I'm not going to be buying when we get into this area. Oops, I'm grabbing myself again. When we get into this area right here, I am not going to be buying. That is not the point to buy. If you're buying here, you're taking great risk anywhere in this zone because you could get caught at a market cycle peak. Now, you should be buying here, and if anything, here. You should be done by this point. By the time you roll into this markup phase, you should be selling all the while. We should be done selling before we even hit the market cycle peak. That's how the smart money does it in the stock market. That's how the smart money does it in cryptocurrency trading. By the time you're at the peak, they're gone. Their bags are packed and they're on vacation and they're having caviar and sipping champagne on the beaches of the world while we're sitting back thinking we're about to get rich until you fall off this cliff into the distribution phase. Then you're rubbing your head wondering what in the world just went on. All right. So that is why I'm stacking right now. And I got plenty to sell once we hit that next markup phase. So while everybody is clamoring and buying stuff at 5x, 10x, 15x of the current levels, I'm going to be selling you my stuff. So I thank you in advance for buying my items. Now, I'm not going to sell them all because a lot of things I'll keep. Whenever I stack, I might have 10, 15, 20, 30, 40, 50 of something, but I'm going to keep one or two for my collection because I am also a collector. Tell me what you think about this chart. Do you agree that this is representative of where we are in the current market? Chime in. And of course, I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And thank you in advance to anyone who would like to donate to the cost of me producing these videos. Thank you so much. And to everyone who has sent a super chat or a super thanks, I appreciate you. Stay tuned, more to come, and I will have much more content coming at you this week. So don't miss out. Keep your eyes peeled. This is Carlton, and I am out. Get it?